So right away, for those of you who are not here with us right now live, but will be watching this video later, I'd like to say that do not focus under any circumstance on one particular candle, especially candle, because when we start out, some of you who have been trading for a while, you probably know that this is the case. It's extremely difficult because of how much information is out there on a single chart. You know how it's really easy to sort of zone out, reflecting on what you have just learned recently, not here, elsewhere, maybe on YouTube, maybe you listen to some podcast episode of someone's talking this, that, and they're talking about candle patterns, and you're just trying to look for these. You need to ignore all that's happening, like little trigger candles. I would say find your patterns most of the time. This is what's going to really make you be a profitable trader, because you want to look for explosive moves or directional little creep ups or creep downs, like little sell-offs that are steady and consistent, and you need to determine what the direction of that is. And so the market generally tends to look at these areas of consolidation where traders take a position in either direction and they make bets. They say price is going up, or they say price is going down, and they start trading in the area. Today we have so many good examples today, and these are the kind of things that you need not prepare for, because you have to actually live through it. All right, and sometimes it might be painful, sometimes it might be, but in the end, all of these roads lead to the same destination, which is your general literacy about markets and understanding of what is going on at any given point in time on the chart. And so looking at trigger candles and little tiny setups where you don't give space, when we refer to space, we generally look for space. We need to give, for best entries, you need to have space. You need to have space between the candles. You can't get in here with no space. You need to have space, and you need to understand if that space is creating a mirror of previous space or not. So what I mean by that is, see, volatility, to visualize it, is actually possible to visualize volatility without looking at certain numbers, or fear and greed index, or CBOE's VIX, or historical volatility, implied volatility, and numbers and stats and stuff like that. It is actually possible to, well, statistically, you don't really need, because it is, volatility is also a lagging indicator. If you go and look at some of the charts, US VIX, for example, on the S&P 500, you will see what I mean by that. A couple of historical crashes where volatility wasn't really giving you any good readings, and that's okay. So for us day traders, we need to find areas on the chart that look like they're living, breathing spaces, and your job architecturally is to find pivots, okay? And these are not indicator-based pivots. These are not something that you can just sort of identify using any sort of indicator. It's just eyeballing the chart, drawing your levels all over, and then as you move forward, those levels will kind of assist you in the long run. Okay, so you're constantly, if you ever heard about a game called Minecraft, kids of mine, they love the game, but Minecraft is something that, you know, you build. It's a procedurally generated world, I think is what they call it, and it's endless. And so a price chart is kind of like Minecraft. It's like bits of blocks that get stacked on top of one another, and there are certain patterns here that you can exploit and they have predictive powers. Okay, you can identify those things very easily, and then when you mix and match those with your some people have joined us. They've had common questions like, my chart is super messy. I have um, I have MSAR, DSR, so it's unreadable. So first of all, if you notice, I tend to not have them on because MarketSpy is there to snoop on this information. You can record it in your notepad. You can just write down the price level and say there's a pyramid there, and that's what I do. Or you can have one of these indicators. DSR is called the third opinion for a reason. It's because we consult it every once in a while, but we don't stare at it. There's nothing that can happen tick by tick on any one of these indicators. So momentum needs to build up. I will show you how in the platoon, somewhere around this area, I thought that I saw a rounding off of price. Actually, I don't even remember where it was. I think it was, you know what? It was from here to here. This was the area, and then we dropped really low. So this was, I think this was the area, and yeah. So there are a couple of things there, right? So the reason why we're seeing this without using any indicators, right? Like purely looking at the chart. Let's get rid of all that. The reason we're seeing this consolidation here and an incremental rise in value, and Bitcoin is recovering back to 50K, and actually it will recover fully to these levels. But the reason why we're seeing this is because if you zoom out a little bit, yeah, forget about zooming in at these zero line crosses, at the delta, at lightning going up, and calculating like which zone is it in. Is it in the blue zone or in the bearish gray zone? Do I buy here? Do I wait a little bit? What about the green dot? All of these green dots played out, but because it's a bearish structure, they don't really matter, because if anything, these are great short signals. Because when the market is falling, there's so much panic and fear that nobody really cares. Everyone wants to sell at a good price. So this gives a good price, right? So if momentum goes up, it was my understanding this morning that we should be looking for short setups, but we didn't have any major spikes, so I wasn't sure. We had extreme sell-offs and like these little sort of rejections, and they looked like attempts to go higher, but unfortunately kept failing until this moment here. So looking at this momentum indicator, you can see the lowest point is here. Then you can see another flat point, which is equal to this point here. Yeah. Meanwhile, you can see that this low point corresponds to this low point, and it's actually significantly lower. So it's beginning to get really oversold, right? This is what we're looking at here. Let's get rid of these yellow lines for now. So you can see how this area here, I thought that we were going to round up, and right about here on this, in this area, I thought that we would have, this is called a rounded bottom formation. So if it would have went a little higher, this would have triggered a rally here, and we're actually seeing it now. Okay, it was a bit early. I kind of jumped ahead of this. We were falling. I'm like, yeah, maybe our previous zone here, maybe this is where it kind of will consolidate, but no, didn't happen. It was still a profitable day, but overall, these are the things that I was looking at, and these are the kind of things that you need to be looking at to sort of first establish your understanding about what is going on overall. Now, all markets, everything is dumping. We're not talking about shorts for now, because like I said, if you're if you're sort of determined to find a setup, now we have 4 strategies, right? We have one called Punch Out, one called the Dragon Skin, the Jackrabbit, and Market Enemy Type 1. Now, the Jackrabbit is sort of like a rename of Type 2 trade setup where you go for power scalp. As a matter of fact, this was a power scalp here. Excuse me. And we're gonna take a look of at what exactly gave us that idea here. And so overall, logically speaking, you want to give it some space. Now, never trust the first signal, especially when we are. So here's the logical sort of look at the markets. Okay, so here's the peak. You're thinking to yourself, here's the peak. We have a pattern, rising wedge, fall, and we're now trending clearly below pretty much every significant key moving average that's built into MarketSpy. We're literally like below EMA, right? And so it's very important to understand this value line. When we're above it, Bitcoin is likely to keep rising. When we're below it, it's likely to keep falling. Okay, its value is likely to decrease on this moving average, the white line. All the others, this is a 5 minutes, very noisy, but you can see somewhere around here we had a crossover, but we started trending down below. Now what's interesting, like I said, I sort of complain about this, nobody's fault, but I was saying how we clearly on DSR, there's this one thing that I missed where we closed below the CPR, below the daily open. Here, this yellow line is a high probability CPR line. We closed below it, came back, got rejected, and we had a bearish cross on the EMA. And this is a thin sandwich, so to say, where compression is extremely high, and so there's not much support. We can pretty much count on the fact that if we see a rising wedge here together with this setup, it is likely that we will fall. Now, this would have been a nice short, but there's no such thing as being wrong or right, or sitting there being regretful that you didn't participate in this, because you said, okay, I am sticking to one strategy out of the 4 that are available. Now, if you come from other systems or your own methods, you also fall into one of these categories. You're either a scalper, power scalper, and you understand all the risks that comes with that. You're a swing position builder, you're a breakout trader, or you're a trend follower. There's nothing in between. And then there's MarketSpy, which is a hybrid of all these systems. And you kind of scalp your way along, and you end up building a swing position before you even know it. And when you know it, it just kind of sticks and stays there. But I guess what I'm trying to say is, instead of focusing and zooming in right here, this is the reality for most. This, okay, and now you're counting these candles and you're saying, is it bullish? Is this a wick? Is it real? There's a GPS that should I go long here? Well, it failed here. What if this one fails? Counting on one signal like this makes you lose faith in the system, and that's very bad, because when you don't have the system work for you, psychologically it starts to work against you, where you end up seeing a confirmation, you don't take it, but then it actually works out and you get in, but it's a little bit too late. So, and all this effort for nothing, and so you might want to close your position or not trade at all, or who knows, right? So I think it's better to zoom out and get out of the 5-minute time frame. Like, leave it alone. Go to 15 and understand higher time frames are a little bit more reliable. Okay, they're a little bit more reliable, but they also require patience. And if you're magnetized to lower time frames, there's something to be said about you needing to work on your patience. Okay, that's 100% fact. There isn't a better setup on the 5. You can trade it, certainly, but It's not like you marry it and you're zooming in and now you're working with those candles. So you have to float around. You have to be free and explore your options. Now, before we get into the indicator, a lot of people they pay huge money to go to these centers, basically, for traders, or maybe it's a public event. I don't know how it's done these days, but or maybe at work you have your personal shrink, and you talk about all kinds of your demons, basically. And when it comes to markets, markets know how to bring out the worst out of anybody. But so you need to somehow find a way, before anything, to detach completely from all that you know. And every day when I look at the chart, I know nothing. I literally look at it and I say, show me the way. Because that's just how it is. Because we can't control the outcome of any of these setups. But if we have a high probability trade, we need to act on it. And if it doesn't work, we need to cut it. And we need to accept the fact that, look, the market knows better. It's doing what it's doing, and it's refusing to. There's probably something that's going on that we don't know about. So if it doesn't work, it doesn't work. So if this rounded bottom for me now, look, on the 5 minute, yeah. Now I was looking here, and I was like, you know, we have a low, a lower low, but here we have a low and a higher low, and yet another higher low, and it's looking like it's rounding off. You want to see a rounded bottom formation like this generally. Actually, this was a good setup here. It's and if you zoom out, it's kind of like diverging here. It's curling up. But then we had this. We had another one last smack in the face here that pushed us lower and reset what we saw here originally. And probability suddenly increase when you go over here and it's at the 0, and it is a little bit late and we had a dump, but at least you already know that we're seeing some green, and it's likely that if you go long here or here or here or here or here or here, anywhere, you're in the green cloud and you should be okay based on probabilities. Now here we go to a 15-minute chart. Look at this area right here looks so nice. And this, like, rounding off, yeah, maybe we'll go up. We go to 15, suddenly it's barely anything. It's barely a range, and we have convergence. Same low, lower low, yet another lower low, lower low, and we continue on. But now on the 15-minute, this pattern that I was looking at here is actually happening now here. We're building up. You can see it. We're rounding off, and this is more reliable than the 5-minute, and it's clearly visible. Look at these dots. Logically, you would say, forget about a max 7 straight. Anything has to do with, like, just look at momentum waves. Now in the platoon, I say, wait till we get one of these blue waves, right? Bears are gonna get in trouble pretty soon, and this was a sell-off, and then we had a what was it? Off of these lows to here. Yeah, a 4,000 point rise. That's quite impressive. Okay, not as impressive as the one last night, but here we actually are seeing confluence together with all the momentum put together, and we just had to wait and let it do its thing, right? And here it's rounding off, and now we're seeing a little bit of blue, we're seeing white, we're seeing a max 7 setup here, which you could have traded, and so many other things. So now that we see some strength, price regaining strength, we know that we will probably go back to above the 50 level. Okay, probably. So what that means is the directional trade here, if this is a reset of the dump, then I'm going to be a bit more confident in finding signals that are spelled bullish, and I'm going to trade them. Okay, so whatever, signals, fine. So what kind of signals can we actually extract from this information? So now that we know, we established our, they call it often You can find people using the same recycled words on Twitter. They'll say my bias. You know, I'm long biased. I'm short biased. It's not that you want to see it. It's you have identified some structure that looks a little bit. If bullish price action is what you're looking for, then this might be it. And then you also say, well, could this be a dead cat bounce? Certainly. So you're being extremely careful. You know that anywhere below here, this low, the higher low, if price goes anywhere below there, you're out and you're reevaluating. And I don't mean you're entering here and then price dumps and goes lower and you're like closing your position like 3,000 points later. No. Right now, we need to let price build some space in here. And if it does build up space and goes here and stops and starts to curve up, you know that you gave it room to breathe. And now you can probably enter somewhere around here, the orange line. This was previous support from a long time ago. We had a bounce here. We had a little bit of price action here. So it's generally a good level to look for. But could it be a dead cat bounce and a wedge? So with that skepticism, all right, it'll protect you so you don't just tell yourself that, yeah, this is it, I'm 100% sure. And so this brings you to the question of sizing. Like, how aggressive do I go on any one of these setups inside a potential bearish rising wedge, but at the same time a rounded bottom formation on momentum? Why would momentum fail and continue printing these gray clouds the duration of the next, I don't know. But what would I do if it does? What would I do if this cancels out and continues going sideways and we see gray clouds all over the place? And what do I do then? Do I jump in and short it? So here comes the question, how are you actually going to play this pattern in both scenarios? Now, a lot of YouTubers as there's some characters out there, right? But they're right about one thing. They always talk about the bullish and the bearish scenario, okay? That's because they admit to the fact that they don't really know what it is that they're looking at, what they're talking about. None of us do. And we can only rely on our tools or algorithms to tell us to increase the probabilities of a trade. So this is how your R&R and your win ratio will be affected, is when you have a system that increases those probabilities for you as a trader. But at first, in the beginning, you are a naked trader looking at a naked chart, relying on a little bit of understanding of your market that you trade. Okay, you can expect Bitcoin to be extremely volatile. You can expect these tiny little candles to be 1K in size. And you also know that we talk about that when we have bullish momentum and suddenly price drops, it's probably a buy. As a matter of fact, I traded this on this drop and I simply bought. Now, we're going to look at very specific things. So Sujo says, literally banging my head against the wall now. There, and that's not good. So you don't want to be banging your head against the wall. Why was he or she was looking at Heikin-Ashi candles the whole week, and I'm so conflicted in entries and exits? Heikin-Ashi is an indicator. It can help us visualize trend overall. Now, the reason he was looking at Heikin-Ashi candles is because A, he watched one of my old videos where I use Heikin-Ashi candles to look what happens. Look at VVS over here. Let's switch to Heikin-Ashi. They smooth price action, right? They smooth VVS. Look at that. Blue, red, and look at price action. Yellow, 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 bright blue for the first time here. Okay, pale blue. Max 7 setups are smooth. You have your long here, scale in, thousands of dollars. Understand your ATR. Each candle moves 1 2,000 points up or down. So scale in. There's no one single entry for you, obviously. So, but why stick to Heiken Ashi when you have these candles? And I'll tell you why. This is also important. We need to talk about it. Is because a lot of people here come a little bit spoiled from other sources, other YouTubers that perhaps have similar looking indicators, and the way they trade them is reckless. And they use Heiken Ashi to hide poor signals of their indicators. Heiken Ashi, as a matter of fact, I'll tell you a little story, and I'm getting to the education part on MarketSpy, Armageddon, and DSR in a minute, but we need to have this little intro to put things in context. On TradingView, if you publish your algorithm or your system using Heiken Ashi candles, and if somebody finds out that the script, whether it's private or public, okay, the system can be private or public, but if somebody finds it and reports it, and I actually had this report, somebody reported that we're using Heiken Ashi, and the developers of TradingView have told me to immediately take it down because it is deceiving and is confusing to traders because it makes everything look perfect. Now, people like CryptoFace, another YouTuber, and many others only use Heiken Ashi in their trades, and they might create the illusion that they're getting the results. So it's basically a crapshoot. They can exit and enter anywhere they like, and you won't really know it. All you see is the green. All you see is the green or the red, and that's it. Mostly it's the green because by the time you see it, it's already up by 200%. That means it's been planned. That means it was a lucky shot, and or maybe according to his technical knowledge, he just, he got it right, and now he's ready to show it to you. So Heiken Ashis, and we have a prime example of Sujo there being confused because I'm pretty sure a lot of people have come across these Heiken Ashi candles as an easy way. And I'm not gonna lie, for beginners, it's actually recommended to smooth out noise on lower time frames, like 5 minutes, because if you get lost in these candles, like it goes up, down, up, down, up, down, and you turn on Heiken Ashi, then you see it's actually just down, like the whole way through. Maybe a little bit of maybe I can short over here and go down, and so it makes it easy. But your entry is probably like shorting here instantly underwater, looking like it's recovering, going long, but it's actually at the top. So it's very easy to hide and smooth out your signals so that Heiken Ashis average out all the candles. And so people who have indicators that hang little symbols, kind of like what MarketSpy does, above or below candles, prints dots and stuff like that, it makes it look amazing. You want to see? Let it load up a little bit. You could have shorted the diamond. If you ignore it here, it's in the baseline, right? Could have shorted it here twice below everything. What a short. Money. And look at that. You just had a pyramid over here and you could have longed it. Guess what? Your entry would have been over here. You're instantly underwater, but still it looks like it sniped the bottom. Here's another one. It sniped the bottom. There's no, it just looks like a mean reversion there. Look at our Elliott waves. They're all red starting from here. If you just use the color and use MarketSpy's Armageddon and go on the color and go orange, doesn't work, cut the trade. Orange works, goes your way, goes your way, goes your way, goes your way, goes your way. And you don't touch it until boom, white, you close the trade. In theory, amazing. White X, extreme volatility, possible dump, market manipulation, momentum break. That means this green dot is canceled. It's gonna override it. Game over. But do you know the distance that if you went long here and then you saw white X, this is $1,000 move up and down in this range, even more. But it looks amazing. It's like, yeah, I can cancel it if it doesn't work, and I can go short. And look at my VVS, it's confirming. But let me tell you something. This is actually something that you can do and work with if you have that hike and a she mentality. If you can sort of feel it, understand it's a feeling based system, okay? And a lot of indicators rely on that. Now you turn it off and suddenly you have to do a lot of work. Suddenly it's like, damn, you know, this looks complicated. It's gonna leave my hike and a she's. Really, does it? Doesn't look too complicated to me. But it's not as impressive, is it? But there's a method to the madness here. So my point here is that you cannot get stuck on a rigid rule like that and say, I will only use hike and a she, or I will only do this. It's every once in a while you turn it on to scan the charts and say, okay, well, I guess this is since it's telling me to go short and I have a signal, I might as well try it. But there's no safety net. You don't know if it's clearly if the entry you're getting is best or not. Now, if you're working with precision here, getting in and out, it's extremely important to get in properly and get out properly. And so we're just going to skip ahead and warn everyone that comes in and starts using the system to try their best not to focus on any one of these candles or symbols and give one priority over the other, like stronger, weaker. There's no such thing, okay? These green dots are an absolute money maker in an uptrend, but so is everything else. Okay, you go long on these green dots with your eyes closed and you look like a genius. That's the beauty of a bull market. All right, price starts to consolidate and suddenly you're like, damn, I thought it was like magic. I thought it was the whole oversold. The waves must always go up and down and oscillate between the zero line. And so you soon realize that that is not the case. So if it's not the case, then what is? How can I find actual trade setups and trade? So for that reason, we have very basic strategies that get into these very easy to understand concepts, starting from the actual market structure. Before you look at anything else, I wish I could just turn everything off right now, and I will. I'll go to the augmentation module here and turn everything off, all these symbols, before we get to the strategy part. So first of all, you start your day, you scan any chart, whether it be volatility charts or commodity charts or asset charts, and you just look at the structure. You look at the fanning out of these equilibrium zones and you see the location where they are in relation to price. All right. So equilibrium zone 1 is what we call a tracker. It tracks price very closely and gives you short-term early scalp entries. Now we have equilibrium zone 2, which is a little bit somewhere in the middle, and it can back you up when we're starting to see some weakness. We go into it. That's probably like the backup equilibrium zone where, you know, sellers and buyers are found depending on where we are on the price chart. And then we have the actual equilibrium zone 3, which tracks the overall health of the market. And then we have a leading moving average called price, actual price, which you can draw as a line. And when this price starts to trend below all of them, and it's not as clear, but we have done our best to illustrate that. And you need to give it some room to express itself. Price needs to express itself, and you can't just say, look, there's a green dot, you have to go up, or we've crossed below everything. There has to be a confirmation. So once price goes below and kind of nibbles at these levels, and like it's happened here, but it didn't work. We reversed and we had another little uptrend, and then second. So that means we already tried. You interpret this as the market is telling. It's not just a random event. It's like maybe it's telling you like, yeah, we attempted, And then all the greedy bastards came in and pushed it up again, and so we're back to normal. But we're not really back to normal because the market is telling you, like, look, I'm a little tired here. You know, these guys keep pushing me. No, we have funding, we have all kinds of things. So what do? We go live and we talk about, it's been a while since we had a what the hell moment. And could we see like 40K? I even said something crazy like maybe 20K full retreat. Like, it's possible. But we will know when that happens. And so when this happens and price goes down, is it another dip or not? Well, DSR is the final piece, but I would like to say for an overall scan, you would probably use it to see things happening early. Okay, and here we're trending below the CPR. This thing is like, if you go to a Confluence tab that will show you sort of like wait for a direction, the Fibonacci levels will be at 0 here, 23 here, 36 here, 62 there, and so on and so forth. And once we cross the 23, we're trending in that direction, which will probably push us above this this compression area on the CPR, R1, R2, and we're likely to see more continued momentum. But we talked about DSR, right? And yesterday I failed to open it. Don't ask me how. We're humans. We make these mistakes where it's just we have a little brain fart, and then we go, you know, like, why? You know, I totally missed it. Why? Because I was fixated on long boxes for market enemy 1. I was looking at this area over here, and when we printed a signal that confirmed that there could be something here, because those pyramids, they take a number of candles back and they compare the size and everything. And so this completely went over my head, and no one mentioned this, that hey guys, we're like trending below, and we're likely to cross. I mean, this starts to bleed. It goes orange. This is rust. All right, this is shiny silver metal. The actual color is silver, and this is rust, and it's there on purpose. And we crossed over with yet another element here, the 200, and we clearly see like a rejection, and then poof, and it's like, okay, what are we gonna do here? Probably go down. Momentum is like failing. So this could have been a short. Now, when we augment it with our Armageddon here, now I'm only looking at 15 minutes, nothing else. I don't know what's going on higher time frames, and I'll show you now why that doesn't matter. And we look at the momentum, and we see that, okay, so we posted a few white candles, failed, and here closed below the baseline. And look at the magnetic ribbon. Magnetic ribbon is very important when we look at these things. Very important. And we can see how we're literally like trending together with it, hugging it very closely. You can see what price does. When it leaves a gap, it comes back to it. Leaves a gap, comes back to it. Leaves a gap, comes back to it. So these are small, tiny little gaps that Bitcoin gets attracted to. And the magnetic ribbon is called that for a reason. We didn't just name it for namesake. We actually, there's a reason why it's a dragon skin. There's a reason why it's a jackrabbit. There's a reason why it's market enemy, and there's a reason why this is a magnetic ribbon and not just EMA. And this is to help you better sort of ingrain that in your head, and so to understand what it means. You have an association that, look, in the strategies, this will come in handy. You will know how to deal with it. But you know, magnetic ribbon is a magnet. All right, price cannot separate away from it for a long time. Today, I had a good trade in this buy zone right here. Now this candle, right, of the lows from here to here is a 4K candle, which to me is a perfect trade, and it's a high probability trade. It's not like, yeah, we're dumping lower. This was a buy for me, and here's why. Flip the chart. Now, we talked many times about the impulsiveness of candles and how that is just not sustainable. It's not. There's going to be something here. Now, this one there's a rare case like this when we just have a little stepping it. But when we have a candle that drops down and goes below into the EMA ribbon so aggressively, it gets separated away from price. Why this is important? Now, bar replay sucks. It sucks. How can we even... Okay. All right, so... Yeah, unfortunately, you can't even see it, but you can still see it. We talk about the EMA ribbon being a magnet, right? A magnetic ribbon. What does that mean when we look at this pattern in particular, where we've been trending, boom, baseline reclaim, first rejection, trampoline. Now the trampoline is when too much selling, too much aggressive selling gets absorbed into the ribbon, and we can expect a bounce. Good, we had a bounce. Also was an awesome trade, profitable day here personally. Not to you know, but here we had a baseline reclaim, right? And we see momentum is going down. Sure, yeah, it's a continuation pattern, but before that happens, equilibrium zone 2 is here, and it's the same all. Equilibrium zone 1 here, supporting price action next to magnetic ribbon, is just slightly below it. Equilibrium zone 2 is where we are likely to find buyers, and where we will really have a reversal is probably equilibrium zone. Now on a time frame like 12 hours, you have to understand it's daily dumpage. If we come down to this level, we will probably overshoot down to the CPR level here. And it doesn't matter what it is. You just know that this is support. This is support, all right? And if we go down to 34, better believe there's going to be some fighting over this price, and a lot of the buying is going to happen right there. So as that's the case, the equilibrium zone 2 is my first signal to buy. Baseline bounce, we already had a bounce here, and we came up to here. I bought right here. What do we have on the delta? Delta is momentum, this yellow momentum thing with a histogram over it, which basically shows you the difference between the white line and the blue line. The two clouds over here, the blue cloud and the white cloud. And delta is the difference, the distance between them, right? And so what it's showing me here is that potentially, right? When we cross over, we'll have the white line touch the blue line, and we'll create the C dot, this brownish red dot over here. And then we have the opposite of it is the green dot, okay? And this is telling me that, look, we're likely to curve up a little bit and make the price go up. Go up where? Well, it's an orphan candle. This is a black sheep candle because it's different from all the other candles here. Doesn't matter that it's dumping. It's just simply it's different. It's huge. It's something's going on in the market. I don't know. It's different, and probably half the value of this candle will be claimed back, because we need to punish the easy shorts somehow. And how do we do this? We do this in an area where the market will attract a lot of buyers and possibly reverse. So maybe this is the area over here. And it was. And now we're going to range here for a little bit. And so this is your, you flip the chart, it becomes a little easier. And you're like, okay, if this was dumping, would I long here at the top? Nah. Why? Because it'll probably drop like half the value of this candle, or it'll probably like retrace and then continue. And so if that's the case and you want to go long, then you go long in this equilibrium zone 2 towards the magnet. It wants to go towards the magnet, right? And sellers don't want to sell here. They want to sell a little higher. So price needs to go up so they can fade it and push it in the direction that the trend is telling us that it's going. So that's kind of like your overall outlook on the market in regarding Armageddon structurally, right? Looking at these moving averages that form certain zones here where we can expect, we're not guaranteed, but we can expect to find buyers. So, you know, impatient buyers here, very greedy ones, and the ones somewhere in the middle that are like, yeah, I might step in. I think it's a good level. And then the smart, very patient sort of like, it's okay, I'll wait for a few months. Come at me, but when you come at me, I'll buy the living hell out of you. I'll long you. And most people would probably start selling into these levels. So that's sort of how you think in terms of higher time frames and these equilibrium zones. And for smaller time frames, it's the same thing, but your holding period is much smaller. So you don't expect a bounce of 3K. You maybe expect a bounce of, I don't know, $100. Yeah, like 500, and that's your range. And this will be determined by the ATR. We just bounced 4,000. ATR is 4,000. You aim for half of this value for a guaranteed exit or entry. Half. To maximize your profit, you multiply this by, well, 1. You don't multiply it. If you're trading non-margined positions, then you're looking to maybe put a stop loss at this value times 1.5 ATR away from the baseline. So when the diamonds show up, you know how this is done. The diamonds. So Armageddon has a couple of modules here, right? And people are complaining. They want to know what each and every, it doesn't matter what the wave is, it doesn't matter what this indicator is, it doesn't matter how do you interpret the blue, you know, it's oversold, overbought, strength, weakness. Everything that you see here is just that. And then there's like volatility and the average true range by which we can estimate like how far it is likely to move in either direction. ATR doesn't care about the direction. It's directionless. It just tells it it's a forward-thinking sort of indicator that tells you ahead of time that, look, we'll travel this distance. Now, where the market takes that path, I don't know. Is it going up or down? I don't care. But we have this much gas, so you better make sure you do all your shopping while we're in this ATR range. Because if you don't, you might not even make it. Run out of gas and go manual mode and walk, or we'll have to push your vehicle. So not a good look. But I guess this is important to state that none of it matters. Now, how you interpret this, like for example, green cloud, it is more likely that when a green dot appears in the green cloud, it is more likely that we will continue up than down. It's more bullish. It's a combination of bullish momentum. MAG7 does not have to land on one candle. It can be in the vicinity, in the area that allows you to plan your trade, and that is what gives you very good like hygiene here. Basically, you're taking care of the cleanest setup ever without any germs crawling all over the place. You are looking for something that's not too pristine clean, but you know, you're looking at an area, you're saying, okay, this gives me an idea that this is likely to play. Now, it might not be immediately. So a MAG7, a strategy like MAG7 is not like you switch to Heiken Ashi, everything lines up, go. The signal strength intensifies when everything does line up, but it's not a rule where you have to be a perfectionist about everything, because markets are not science, it's art. I repeat, markets, trading is not science, it is art. And there are tricks and techniques and little things you can exploit and add your own style, and people look at your art and say, wow, you know, this is impressive. Where did you pick that up from? Well, you say, well, this guy with the paintbrush CR told me about it, and I liked it, modified it a little bit, and it's now my style. You know, I even like it better than his. For example, that's how you kind of like central pivot range, Sujo. Central pivot range is what CPR stands for. But let's continue looking at the actual signals. All right. So in terms of probabilities, when you want to trade something, you have to choose a strategy. Your brain cannot handle market enemy because each requires time, management, and a certain approach and planning ahead of time. So market enemy, however, these strategies make breakouts, trend continuation, trend following, range trading, scalping, as well as sniping bottoms to build a position that much more. It's easier. It's easier, and it is much better than learning it how to do it with as far as I know, you know, other systems, you know, they say they keep it simple, but they don't really define it. So we're going to define. So first we define what the structure is all about. We're in a bearish structure right now. Yes. Do we have bear rallies that are more aggressive than bull rallies? Yes. That's why they're unexpected and screw people over, because they start closing their positions. Can we identify levels that we can trade for a higher probability trade setup? Yes. Is volatility high? Can we go on a single limit order when on a 1 minute chart it literally moves by like $500 up and down every minute? Are you going to go with a single, or are you going to use a ladder? You know, cast your overall, like reduce your quantity here, go back and go on a position on a daily ATR, for example, which is like 4,000. You're like, you know what, is if this mofo here keeps falling 4,000, I'll still average out at about here. By that time, we should have another wave, which worst case scenario can get me out of this trade safely. And you have to have a realistic goal. Like I said, I average out anytime somewhere between 0.2 to 1 daily on accounts, and that is if I have time to flip between them and manage others. That is also so there's a lot of, you have to have a system, like how do you approach this and based on your schedule. But if it goes up 15 contracts, right, when it goes up by a few cents, it's better to take those few cents than let it go down by $1 and say, well, whatever, you know, I have much more than that in my account. Because like if I'm long right now and I'm not, you know, seeing any sort of, yeah, this can spill. Would I be okay? Not really. It's 10K. Now, 10K, in my opinion, is a pretty significant for an account. This is our MS Edu account that has been accumulating and steady, right, by 0.01, 0.01, 0.01, 0.01 daily from 0.5 here. And this took if you let me see, if you let me just realistically show you something. Okay, here's my, gonna look at some stats. Okay, relatively small account. So today's progress is 558. This week on this account, this week 1,400. This month 11,900. Bitcoin's value in BTC, that's 0.23 for the month, which is 25% of the account for the month. in terms of Bitcoin value for the week, it's 2.69, 2%, 2.69%, which is 0.03 Bitcoin for 1 week of trading. And daily, it's 0.01. Today, 1.1% of the account value. In my opinion, this is realistic, okay? And see how we have 83? You know, I'm sitting in here. I'm not focused on the chart. I don't know what the hell is going on. We're not even supposed to be trading, but I know we're kind of like consolidating here, and you know, we can expect a bounce, and who knows, right? And it's looking like maybe if I'm in profit, I might as well just take some profit, because the fees and these little shenanigans, like these little things, while you're studying, while you're developing your attitude to you know, establishing your attitude for the market, because you need to have a proper appropriate attitude when you're trading, based on, so for example, if I'm looking for longs only, I'm not rushing in on every attempt. I'm looking like I'm like, okay, this is what I'm looking at. I see space, okay, I'm gonna have another space here, and I'm probably gonna have another space here, most likely. I'm looking to be able to average out to 40K or 38K max. And for that, in order for me to do that, I need to have, and guys, I'm sorry if this sounds like I'm telling you what to do with your money. I'm not. I'm just showing you like my approach is that has kept me safe for years, and I made a lot of people smile with those with whom I worked. So this is 11K. Sorry, from here to here. That's another, if we go to 38, yeah, might as well be another 11K. So another equivalent of this dump, just by looking at this space that Bitcoin might want to create after a little bit of consolidating here. We might spill down and have another sort of like this little carving in the empty space that it will do. And surely there's got to be some stop losses there. So based on that, I'm assessing, I'm thinking, okay, if we go lower and spill, like, what is there? Well, it's this level at 42, and below that is probably this level, CPR. This is the lowest range you can go, and after that we are doomed, and we're going to 20K and lower. Possibly the bear market is here. It'll be like a multi-year bear market, maybe, I don't know, but we can't go lower than this. And so if my point is to protect my Bitcoin, I must absolutely make sure that I'm prepared for that. But if I zoom in on a 5-minute, looking at this 4-hour chart, which hasn't really posted much bearishness. You know how 4-hour bear charts usually look like. You look back and you're like, wow. Zoomed in, it'll blow you away, right? But on a 5-minute, I don't know, I'm going to go to 5-minute right now. So if I'm trading on a 5-minute, I want to be out at a high probable area for a bounce. This is where Armageddon comes in. And I want to be out $5, $10, $50, $100, $200. I don't know what the market will give me. I don't know how fast it'll accelerate after my initial entry in the market. I don't know. But I definitely want to be out. And if I'm really buying a swing position, like spot, but where would I buy spot? Would I buy right now in the market? No. I'm happy to sell at these levels. I as a matter of fact, I probably will have a little bit on the side that I traded up, and I want to go and sell it at this price before it goes any lower. Will I regret it? No. Will I sell here if Bitcoin goes to 36? Possibly. If it goes lower, no. I'll probably be buying. So I'm thinking, okay, this level is probably the last chance, because if we crack this, it will really start falling. It'll really start falling, and it'll be a good place to buy. But here we just don't know. So that's before the indicator comes in. That's kind of like, you know, how to preserve your money and treat it not like, actually we might be in trouble, not using deposits every once in a while, you know. Yeah, see, minus 50. I have 1,400 contracts, and we're down significantly here. Look at that. But there's going to be a dot here on 4 hours. So I'm not going to be averaging this out. Now remember, this account is a little bit heavier, and this is the equivalent. This is 0.48%, and this is a good trade, but that's realistic for this account. It cannot exceed earning 0.1 Bitcoin, for example, right, per day. Is the same as my other account, MEXC, that I share with you guys, that earns 0.01 relative. And even then, that account is currently, even though it feels like smaller, it's like, yeah, I want to leverage up, it's actually outperforming this one, because I have been more active and trading and showing it to you guys. So there's this thing that you have to understand, that what you trade with, that's it. Unless you add to your margin, your job is not to lose any of it, ever. Like, forget about gains altogether. It's all about doing this daily, being able to survive. So, but that's my recommendation. I'm not saying that you can't. The people with different circumstances out there. You might have money you can burn, and you do this for fun. In that case, fine. You're still going to benefit. But for those of you looking for a wake-up call a little bit, I think what you see on YouTube is not realistic. Okay, and I'm going to release this YouTube video on YouTube, so that other people can listen and think a little bit. And what they see out there, we had a user here again asking what's the difference between spiders. There's a big difference. You can't even compare it. It's not about differences. It's about having a system that performs. So how can we back all of this philosophy? Not losing money, exiting on time, knowing where the entries are, probabilities, not trading when we don't have to. This was a bad entry. Look at it. 49, 243. Now, in order for us to go back up there, this has to rise by 5%, 2K up. Now, if I hold this tiny little insignificant amount any longer, why would I hold it up to here so I can average it out? Like, yeah, I might, but consider, if this was on the other account, I'd be actually like a little worried, and I'd be gone in an instance. Because if it falls from down below, it is likely that it'll overextend. We still have no strength on 4 hours here on VVS, and we're just crossing down. I think we're in for there's something going on. So we have to keep that in mind and say, like, yeah, I don't want to, but like losing $50 mentally doesn't make a difference whether it's 5,000, 50,000, or $5 or $50, because, like, what the hell am I doing in this position? Why am I holding it right now? Why is it so hard to let go? Bang! And you close it. You don't want to think about it, because the next setup that you'll focus on will double that, triple that, and more than make up for it. But your performance degrades if you have a position that's open like this, and we're fueling it with hope. It doesn't matter what it is. I'm telling you, those guys on YouTube lose a lot. You just don't see it. They're not wizards. The market is the kind of thing that, you know, gives and it takes. So that's natural. But we're here to increase our probability. So actually, now that we know what to expect, let's switch back to MEXC. This will accept a little loss here. Okay. Sucks, but yeah, I need to think, why did I not exit there on time? Because I actually just remembered in the middle that it was 50K, so we exited it, but a little contract size remains. So okay, so doesn't care, like, if the price goes up, why did I close up? I should have kept it. No, bad entry anyways. Like, I don't deserve it. So now we're looking at the actual signals. See, to to top everything off on the 12-hour, that's my time frame where I found the equilibrium. You know, there's a pyramid here, and guess what happens when you see a pyramid that is so far away from the magnetic ribbon that it almost makes you want to cry, because price needs to be together. They're a perfect couple. They cannot be separated. They will always be magnetized to one another. And so you will see things that are unbelievable where it just rallies for no reason, but actually just wants to come down here, come here and reunite with its average price, the 5 EMA, which is the bottom of this ribbon. Actually, it's on the top when we're trending up, and it's at the bottom since it crosses over when we're trending down. It's much harder for price to recover and touch the 10 EMA. It will struggle with 5 first. It's also hard to dump when we're dipping into the 5 EMA. Buyers are coming in because greed, and here fear. Oh, if it goes any higher, you know, we might have a, you know, people sell at this opportunity. It's a great look. If we flip the chart, people want to sell at the 5 EMA. People want to buy at the 5 EMA, or at least in the magnetic ribbon, at least in there. So let's go to these signals here real quick and actually see some of the strategies and how the hell can we profit from all of this. Okay, so the first question before you jump into any one of these strategies: who are you? Are you a swing trader, a scalper, a breakout trader, or you're just a person who wants to make some money and you have all 4 or 5 strategies available to you, and you can apply one appropriately depending on what is going on structurally with the market? And are you jumping in too soon or too late? So if we've been dumping for a little while, you give priority to signals that are telling you go long. If we've been pumping for a long time, it's kind of like telling you need to be a little bearish and go with the trend, but be ready. And once we flip, you need to not trade anything. You just need to step back a little bit and watch and see what happens. That's my understanding of how it should be done. But on the 15-minute chart, in the platoon, here's the trade. I was about to sign off, and then I saw this, and I got lured in because I instantly knew. We're going to take a look at MAG7. Sorry, type 2, market enemy type 2, not MAG7. There's a lot of talk about MAG7 and kind of makes me think about MAG7. So, okay. All right, what have we learned so far? We know that we need to have a baseline. Is this a baseline reclaim? Possibly, not really. You need to give it a few candles. Give it a confirmation. Is this a baseline reclaim when we have like open space here? Yeah, probably. Is this a reclaim? No. Is this a reclaim? No. Is this a reclaim? Here, reclaim? No. What is it then? Let's flip the chart and see that if this was a bullish chart, and shorting, there's no magical sort of like kept telling you it's dangerous, but this is what you need to know. You flip the chart and do the unbelievable. And just when people think like every little ticket might reverse, momentum is down. So what you do is you apply the same understanding here. Equilibrium zone 1 is where buyers and sellers are found. Rule number 1, we know that. Price taps. See these green squares over here? It tells you a temporary stop or reversal. We can add, if these were flags, checkpoints, could we add to our position in the dragon skin strategy? The dragon skin strategy tells us that when we see the dragon clearly and we get a flag checkpoint and price dips into it, there will be buyers. In our case, there will be sellers. Look what's happening. White X. Aggression, acceleration, momentum, volatility expansion. Be careful, right? Things are going to get a little crazy. Telling you ahead of time. You know, you don't know. It's directional, but if you're in the dragon skin and moving away, this white X is probably going to accelerate price in that direction. Good short, absolutely. Dips, Sellers sell, sell, they sell. Is this a reclaim? No. Wait a little bit. It goes down, comes out of it. Momentum is still looking crappy here. Equilibrium zone 1, sellers, sellers. On every check point, it's a pause, it's a stop. Now let's flip this and go to a place before that when things were looking peachy and we were bullish. Now, how is this different? When we have a baseline reclaim, checkpoint, buyers, checkpoint, buyers found here. Checkpoint, buyers are found here. Checkpoint, equilibrium zone, buyers. All right, struggling a little bit, struggling. A couple of red flags, struggling now. Yeah, it gives you early warnings. All right, goes down, finds support where? Equilibrium zone 2, right here. Boom, in this area. Now you could get along here, go along here, here, whatever. Maybe give it some space. Reclaim, continue. Checkpoint, buyers. No buyers, they're not interested. They want to go buy lower. Where? Equilibrium zone 2. Boom. And so tell me, how is this different from bearish price action? When we flip the chart and we see from any point in time or our history here on the 15-minute chart that it was a bad idea. Now the structure, this CPR is very important on DSR. We talked about in the beginning of this video. We had identified that and we saw that we had structurally changed here. And like we hear news about Tesla dumping and all that, and something's going on. So for a probability, look, if you go short and if it doesn't work, just cut the trade, trend resumes, start looking for these damn long positions. But probably a short here, probably like yellow X, it's a short. It's a short. White X, probably volatility is going to go through the roof. It's a mega short. Another one. Now here, baseline reclaim. Boom, retest, rejection. Right? Bullish reclaim, retest. We're going to get to those retests. But in terms of, this is the dragon skin. Now again, yellow X, continuation. Now the pyramids are, they're neutral. They don't really... they don't have a directional bias. We use them too long. They will show us impulsiveness and how profitable the trade will be. We don't know, but most probably that is the point of reversal or a continuation to the downside if we're in a downtrend. So we will look exactly. Sorry, my phone is just going crazy. 2 a.m. in the morning. Come on, guys. One second. Okay, so this is you're looking at. So do you see what I see? You have these checkpoints. This is the opposite of flags. Now, yesterday I published a little PDF that talks about how these kind of a reversal attempt, right? You should take if you're short from here, right? You should probably take profit here. If you're short from here, you should probably take profit from around here when this impulse, because it can reverse, right? If you don't have a position, you can try to add to it or play a market enemy to the downside. But honestly, the dump was so vicious that there was no way to actually do a market enemy type 1 on this downtrend. And the reason why that doesn't work, type 1 doesn't really, unless it's a range. Type 1 is when most of you guys know what type 1 is, right? So when price is falling, it's usually faster. You have seen just now on the 12-hour and the daily that we just have one single candle that is like 15K long, right? It's just one monolith of a candle, and there aren't really any wicks. It's called an elevator. So our only chance to go on a profitable short is to rely on the equilibrium zone and these checkpoints unfortunately. And the bullish dots, the bullish dots are probably the best entries to go short. As they reverse and bring price closer to the dragon skin, your entry chances of you like shorting this perfectly is good. So if you can catch one of these, it's probably going to be a good trade. Shorting is profitably instantly. It doesn't jerk around a lot. Just keeps going down smoothly. And it's the same thing. So we had a let's now flip this. Now that you know that there's absolutely no difference in terms of like markets the signal structure, right? Architecturally here, the energy that MarketSpy reads from price action is the same. And so when it gives you these signals, it understands that directionally up or down, it is the same in terms of strength. So let me show you something here. When this X showed up, now someone might come along and say, well, CR, didn't you say that this is a short signal? Like, so I'm going short on this. We talked about two things in particular. We talked about that when there's an outlier candle and it looks extremely weird compared to the others, we probably should consider buying it. Now, are we buying it here? I bought it here with the diamond disappeared. Why? Why did I buy here? Like what made me like bullish here? And it was a small scalp just before me signing off at the platoon, and I was like, oh, it's a long. I was just about to go, but we have a long signal. How? Remember the space that we talked about? I'm going to use the yellow marker and put these dots here, these orbs. This space, price deviated too far away from the yellow magnetic ribbon. Now, magnets don't like that. You know, you're taking something away from it, from its average true price that's moved by, it's very simple. That's moved by almost $1,000 away from the average. Now, previous ATR and current ATR is about $1,000. So it's actually moved away from the average price, which is the EMA, historical average price of this current price. Does that make sense? ATR, it moved too far away from that. It deviated. And so, should we buy this or not? Well, it created this sell window that I call. And for a power scalper, if you are a jackrabbit type 2 kind of person, you know, and you go full size in here, you have baseline support. Just because it turned a little red doesn't mean it's bad. It's actually good. You have this window, it's likely that price is going to go up. And it sounds incredibly arrogant, but I would say guaranteed. And that's why the stop loss system here is as such that you get in a position, you know when you're going to get out. People, professionals will tell you know where your exit is. Your exit is if price fails to hold and produces a wick and the next price destroys that wick and goes lower, that is your exit, lower than the wick. Now, if you're sitting there and you think that, not you guys, but as a person overall, you're thinking, well, how can I actually, you know, trust that? Because, well, where are you going to have your stop loss with a traditional system? What are you going to do? Are you going to put it here? Are you going to put it right at entry and you're going to get knocked out? Are you going to put it here? So our system tells us that on this Egyptian pyramid signal, pod or no pod or just a pod by itself, if we have a baseline reclaim, number one, retest, number two, deviation, price has gone away too far from the magnetic ribbon, number three, momentum, that is probably, you can guess in your head, okay, it curved down and it's probably going to curve up, yeah, delta. So you're thinking, if I enter here and if it goes a little bit lower, what am I going to do then? I'm screwed. And what if price snaps back and the EMA is already here by that time? Well, that's why you cast a ladder. You don't go, you have to make that decision by yourself. Do you cast a ladder? I did. I cast a ladder and I went to my 5-minute ATR, which was $500. And guess what? From here to here, it overextended a little bit, and my average entry was right at this yellow line over here. So what does that mean? That means I casted a ladder. I did not go instantly with $300,000 over here. And I would never do that on this one Bitcoin account currently. So the trade would probably be somewhere around 10K, 50K max. And I'll be willing to lose about $100 if we go lower than my entry. So type 2, you have your trigger candle. All these parameters that I'm showing you, you have to understand that this is an odd one out. This candle is a black sheep candle, all right? It's not normal, all right? There's a nice family of candles here, and then there's like this very unique one here, and we want to buy it. How we do it is up to you. You can scale into it using the tools here, or you can go all in one size, but you know it's a reversal because there's a pyramid. Yes. Yes. We don't write in the description. Our system is, our indicator is very sophisticated, but the outcome is not guaranteed. No, it's a reversal here, and you go long, and you exit at the first sign of resistance. Now be humble, my friend, because here we have a 1K move to the upside, and that's what I traded. This was one trade that made all my time wasting here with these zones and the stuff that didn't work. I was just like not really convinced. I had a few trades here, but overall this one really nailed it. And so I was happy. You know, I brought this account up to 1% on this one move, simply. How was this actually possible? So the sell window is what you're counting on. Now let's find an example where there is no sell window and there is no baseline support and there is no bullish reclaim. And what does the pyramid do then if you see it? Let's go back a little bit. And let's go here. Too bad. It's the same thing. Here we, first of all, baseline reclaim here, retest here. This is closing below the baseline. This is losing of the baseline. This is not a retest. It doesn't hop, 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 hop retest. It goes up, down, and up wherever, however. But if it goes back down below it again, it's probably going to lose it. It's the end of the trend, all right? That's why it's green, and when it goes down, it's red. Now check it out. Price dumped. We had one pump and then another candle trigger. And we're like, Delta is curving up. Long here? Yeah, possibly one last time. $500 move. Banger of a scalp. Banger. Open window into nothingness. Void area right here. How about this one? X, you know it's going to dump and you're risking, but you're a powerful scalper. You want to go long into the sell window. $500, $600 move. Exit right here. You know, good. Stop loss 10% running, but you might as well exit everything, because why would you put a stop loss in 10% running if you know that it's likely, go read the description on Armageddon, that this likely is an extension of ME type 1, and that these pyramids are telling us that we better start looking for a long from here to here. And actually, if you did that, it looks like it failed, but do we have a trade here? I believe we did. I believe we did. This could have been a nice profitable trade. Now, if the market gives you money but you don't take profit, I don't know what to say. There's no system that's going to save you. If 1,000 later you don't take profit, doesn't matter the size of your position, and you don't manage it from there, you're just sitting on it hoping that it will reverse, looking that we're trending below all these baselines, no system is going to save you. You need to work on that part. But I'm just generalizing. I'm not saying that we have that is the problem here. That's not the problem, but that's what it's telling you. It's telling you, so you can decide at this point, I go short or I go long. If I go long, there's a lot of risk here potentially. Value line, a whole bunch of things going on. Momentum is losing its power and going down. Don't wait for this green dot to save the day. Actually add to a freaking short on it if you're trending below all baselines. This is your short signal to add to on this checkpoint, the green square. However, if it rips above it, add a small position, very tiny position. Put a stop loss here at the swing high, at the lower high. And that tiny position, if you put 5K in here and your stop loss is here, but your exit is like wherever, you're like, yeah, it's gonna dump, I don't care. If it goes down and it's already in profit, take it. Good trade, good directional trade, take it. If it reverses, don't touch it. If it goes closer to your stop loss, yeah, exit and say like, well, that didn't work out. Now this is not going to be the case every time. It's not like we go through these setups every day, up and down, up and down. Once it's there, it's most likely to play out. MarketSpy was designed to be extremely accurate and tell you that, look, you're dealing with this. So there's going to be a little bit of turbulence, up and down, up and down, up and down. But you're saying, you know, if my stop is here, because I'm not sure, it's the first kind of spill away from this. So you identify all these things, you put it all together and you give it a shot, but you size accordingly. Now, if it goes your way and it continues and it's moved so far down, maybe when it goes back up again, add to this position, because it'll and move your stop down to the previous high and keep bringing it to the previous high, to the previous high. Lower high, lower high, lower high, and keep doing that. Why is price reversing here? We're still looking at the rounded bottom formation here. Rounding off, rounding off. We're still supported by the baseline, and there's still a probability that we might actually push up and have a really aggressive rally here to 50 and above. We're still looking at that scenario. So yeah, price will go up. Now, Jackrabbit 2, part 2. Here. There was a reversal here, but it's a retest, and there is no window. There is no sell window. It's trending together with the EMA ribbon here, the price itself. All right, it's trending together with the EMA ribbon. So what does that tell us? That tells us that, look, it's probably a retest, but I'm going to scale into it and go maybe all the way down to like this wick. Seriously, like 6K down. I'm going to cast my ladder, and whatever gets picked up, if this is a reversal, I'll hold it for a little bit, see what it does. And it would have done great, terrific. All right, so we go over here and we see this guy. We see that we're now trending below all equilibrium zones. We turn on DSR and we see where we are on DSR. And we see that there was a daily open on the CPR and we're below it. We zoom in and we say, yeah, that looks bearish. We have a crossover coming up, not there yet. It's lagging, remember. EMAs are lagging. And then you finally look at it. You turn on your Armageddon and you say, okay, is that a scalp up? Because CR told me to buy the pyramids. Okay, so structural change here. First pyramid failed to reverse, and look how closely together the price is with the EMA. It's a short. The pyramid is not a reversal directional trade. Look at here. So you have an X and it's actually trending. There's when this appeared, there was no window like what we just saw. There is no void area. It's very small. It's negligible, right? But you could have went long here thinking that, okay, maybe this was a reclaim retest, maybe another retest. Yeah, on momentum going down, I don't think so. On momentum going up, a retest, yeah, maybe a long here. You didn't need a pyramid, you had a pod. You could have went on a pod. There's a little window here and above the baseline retest. Yeah, maybe no diamonds. The way is clear. I could have, should have, but I didn't. But now I'm deciding to do it here. Not the best idea. As you can see, we fall right through. But what if you did go long and price did not reverse instantly and you're just sitting and you're like, it's supposed to hit the, do you have a window? Like, what's your window to hit the first sign of resistance that I keep teaching you guys about? What is it? 47? So this candle touched it and instantly went back down. Closed. What do? You put a stop loss here. Price goes back up again, touches EMA, sell it at a small loss, or wait for the next candle to knock you out. And that's your trade. You're gonna have to take a few of these that will not play out. And this is an extreme example where you should be short, but according to the strategy, you thought that you could just long the pyramids all the way through. Because if that was the case, what would happen to price, I wonder? If every pyramid was a long signal, how would it would keep pushing it higher and higher and higher and higher. So the pyramid is not a long signal, it's not a short signal. It's directionally it doesn't care. It only counts the candles and prints you a signal that you have to look at the structure and say, yeah, where we are in relation to the magnetic ribbon and the actual market structure and momentum. Support it to go long? No, then it's a short. It's a short. The pyramid is like the other indicators would be telling you, like, you know how they have these labels and say short? Yeah, that's what it is. So you go short on the pyramid if you don't have that confirmation. How about here? Do we have a sell window? Why would you go long here? If you saw the pyramid, would you go long on the, is there a reversal? When literally if you go long here, where are you selling? Where's your window for price to reverse and touch that EMA? Where's the first sign of resistance? You are the first sign of resistance. It's at this ceiling there. This is a short signal. Go short. What if it fails and goes up? Close the short. If it goes above the equilibrium zone here and sellers don't help push the price out, close the short. Okay, you lost a little bit of money. Will never happen on the system, I can tell you that much. If you don't touch it, don't mess with it, it won't happen. Is this a long signal? Well, it's kind of cheating here. We're looking at a long signal. But when we're going sideways like this and we're in the green cloud and this candle is an outlier, isn't it? It's a little bit weird. We have a drop. It's white. We have a reversal. Go long. I don't know. Maybe. What if you're not sure? Is it okay to skip it? Absolutely. Skip the damn thing because you don't know and you don't want to deal with it. Same thing here. But there's actually a little bit of a sell window. Price moved way too fast away from EMA. And if you entered long, you'd probably be exiting it like 0.5 ticks right after your entry because it already left that tail. This tail is what will make or break you as a trader. Most of the time, your entry, you have to understand the distance of a candle in relation to your entry. If you did not get in here, because when you saw the signal, and if you go alert, if you right click on this and say add alert to MarketSpy, and then you will go to pod, right? And when you do that, it will say once per bar or once per bar close. If you do once per bar close, it means the signal will fire off once the bar closed and this one opened, it's already in profit. Do you long this? No. You want a signal that sort of closes with the pyramid, away from the EMA, gives you a little tiny wick, picks you up, instantly puts you in profit. That's your power scalp. That's a true jackrabbit there. How about here? Do we go long here if we have no window? Number one, here on this dump, started dumping from here, spill, and we were very far away from the EMA. Yeah, go long. Boom, instant profit, exit. Do we go long on this signal? No, because we're like literally, there's no window. Do you guys know what I'm trying to get across? There's no window. I was taught to look for this window. We don't have that inefficiency here. We don't have that cheat code, that hack. You know, we can't. There's no sell window. It's not, no indicator works like, oh, here's a signal, go ahead, right? You will lose your money. This is the only way. You have to look for the confluence. You have to look where the price stands in relation to its historic average. And ATR will push it towards its average all the time. Nobody will ever tell you that. People will tell you all kinds of weird stuff about ATR. What if we have no signal? No signal whatsoever. And we have a wick like this that drops into the CPR zone, for example. But it's so far away from, like, prices dropping, and you're looking at Delta, you're like, yeah, it's pushing it. You know what? Go long here. You don't need a signal. Go long. You're so far away from the EMA. It cannot be stretched like that. This will snap back. All right? Momentum will bring it back. Here, we have a window. Yes, we do. We have a window on the pod. Yes, we do. Do we have a window? No, we don't. Short it. Short it. Do you see that? There's no window. Window. The window is defined from where the closing or the lowest wick is and to its moving average, the 5 EMA. You don't see it. It's not there. It's not there. I'm telling you, this is gold. How about this? Is it a short or a long? Do we have a window here? When closed and we're like below the EMA with delta pointing up in the green cloud. Jackrabbits, you, my friends, can already feel it. All you need to do is solidify this understanding. Window here, X. Do you want to scale in or do you want to go with one order? Do you have enough space to sell? Are there any other resistances in the way? Like CPR. How about here? Do you go short or do you long this pyramid? There's no window. There's nowhere for price to go to get magnetized to. How about here? Do we have a window? Even though we have a yellow X, cast a ladder maybe? Do you want to? There's equilibrium zone 3 and delta's going up. How about this? Dump, and so fast and so far away with a pitch black see-through void window here. When this closes, do you want to put it all in size here or do you want to scale in here? What do you want to do? Considering that this was a reclaim, a retest with a long signal, delta pointing up. But my blue wave, do you want to long here? Next time you see it, close your eyes and do it. Put a small size if you're scared. How about here? X, and we've been dumping a little bit. Decisions. How about this pod? Do you want to long it? Considering that we're all below. Is there a sell window to the EMA? How about here? Do we have a sell window? It's actually played out over here, but you would have to exit really fast. Or stay underwater a little bit. You need a wick to place a stop loss. Your stop loss would be here. On the long, you can't just use a small wick. You need to have a long wick, stop loss, and then exit and profit here on the next pump. They do come back to you. However, if you go along here and you're like, oh, I got wrecked so many times, this is why. And we did not talk about this in detail, although I explained it a little bit here and there. Don't trade something that is not there or something that you don't understand. Market enemy, you have that, and it's extremely powerful. And you need to apply a little bit of logic to when trading that. So definitely not sure, in and out. How about here? What's going on here? Would you long this? Me? No. Because there's no window. I don't know why this price pumped. I don't know that. How about here? Nope. because by the time that this candle closed and this opened, it would have been an instant reversal, and you're entering here. And although it looks like, you know, you could have held it and it's gone up, but it would have been a very extremely risky trade here. So no, skip. Here, yes, little window here. How about here? Also yes, I'd probably long this, and price would dump, and I'll probably have a losing trade here, honestly. But if I was zoomed in looking at this, but if I took my time when this candle printed, and I would just look at my momentum and say, I'm gonna scale into equilibrium zone 2, and that would have been a great decision. Instant multi-profit on every candle, again and again. So we don't have any more history. We can go back like this forever, okay? But I hope it's clear. You need your momentum delta to support price action. We're talking longing the pyramids. When we're talking about shorting them, you need to basically look for a place where there's no deviation from the EMA. Okay, there is none. Like this one is the only one that it instantly, and if it played out, you can go long here already. Wait, what happens? If it fails to go higher, it's probably a short. No sellers stepping in. Flip the chart. Tell me, what do you see? Baseline reclaim, retest, continuation signal. Makes sense? Yes, you have to do these things. Flip the chart around, kind of fiddle with these things, but and it just goes on and on and on. Baseline reclaim, need a retest. This was extremely bullish. Never. There was a retest on a 5-minute chart, so you need to alternate between 15 to 5. See what's happening across those time frames for a higher probability trade. But yeah, for the most part, this is your jackrabbit market enemy type 2 signal. You're entering with the information that we just described if it matches for a long trade. You're exiting on the first sign of resistance, which is your 5 EMA, the dragon skin EMA, the magnetic ribbon. You're exiting right there. And you're putting a stop loss on the next candle close wick. Okay? On the next candle close wick, if it has a long wick. If it doesn't have a long wick, like over here, for example, right? Go look to the left, find the wick there. All right? Don't worry, your position will be exited. If it doesn't, you have your stop loss there. You will lose some money. Welcome to trading. It's not a magical, I'm showing you ways that you can minimize all that and almost basically outperform all people out there. All of them. All of them. Using these strategies because they protect you. They tell you when to exit. And I'm telling you how much you can size and what you can expect from this whole idea of like I want to trade the markets, but how to actually do it. And we're looking at momentum here. We understand that delta is very important, and that can give us early signs about where the wave will curve up. The patterns and the shapes on the wave can show us when we're diverging, and maybe we can have a potential reversal. DSR, you don't have to have everything on one chart. DSR is our support and resistance levels, and also a momentum assistant tool that has things like Ichimoku in there. You can study Ichimoku and see what that does, but we have already covered DSR in great detail in the bootcamp, first bootcamp that we had. That's your layer. There is no confusion about this. People say there's a learning curve. How about trading markets is a steep learning curve to begin with. Forget about using a toy indicator. You have a system that does things. And all you need to do is be an analyst and a money manager when you're operating it. That's it. So what other strategy can we talk about? We looked briefly at the dragon skin and how you add on checkpoints in an established trend. We looked at the baseline retest and the reclaim function, and we looked how those pyramids can be extremely bullish in those zones. We looked at how the pyramid is a powerful short signal if we're trading below the moving average of the price. We showed you how the yellow X is a hammer to the head on the pyramid if we're trending below the equilibrium zones and the moving averages, and that's a short signal. And we showed you how if we're above the baseline and supported by it, then the pyramid becomes a buy signal confirmed by momentum delta reversal for scalpers and serves as a market enemy position building tool. Where do you think these boxes come from? And this box came from. This box was profitable. Don't look at it and say like, oh, it wasn't. More so, moreover, these boxes become resistance, as you can see. A flip, now it's 100% resistance that used to be support that we used by getting the first signal in the market enemy. So that is sort of the whole idea here is to be as probabilistic and accurate at these probabilities, assessing them as possible, and knowing when to step away when who knows what the hell's going on. I'm going to go after the stream. I'm going to go sell a few coins. And I'll come back to it tomorrow and see what the chart says, because I see no reason to predict. But I think we range a little bit here and eventually go to 50K and over with some fluctuations in between. So hopefully this was clear, and I'm glad I'm actually recording this video. It's 2 hours long already, but we did cover market enemy type 1 in a separate video. Type 2 just now. Many examples, live trades, and I did a video on Bybit tutorial and how to actually use those type 2s. We looked at the dragon skin, how to add to your position on flags in a bullish trend, and how to add to your position on squares in a bearish trend. How do we know what trend it is? We looked at equilibrium zones, compression, expansion, and where the price is in relation to those equilibrium zones. We also talked about the breakout punch-out strategy, which is a whole different topic, which is both directional bearish and bullish for both markets. Excellent strategy there. And also we talked about DSR in detail. DSR is your ultimate structural sweep and reversal sort of indicator when we touch and ping pong between those high probability CPR zones. That's also good to know. It's a great momentum indicator, but it just looks weird. It's not a wave, it's not an oscillator. It is a momentum indicator, CPR, just like OBV is and just like Ichimoku Cloud is. So when we talk about support and resistance, we also imply that it's momentum that we're talking about, not just flat. It's a dynamic support and resistance, means it moves together with price and accelerates and decelerates as necessary. We also talked about how, yeah, what about MEXC? MEXC is a separate topic. I think we need to get into that. There's a lot of confusion, but it's very simple. It's very simple, but MEXC is the kind of thing that it's not line up everything up on a candle. It sort of shows you an area where things are going to start moving, and using one of these strategies, baseline retest, the absence of a diamond when it clears up the window. ATR is very close to the baseline. If it's more than one ATR away from the baseline, that's an extreme case scenario where you cannot enter. It's most likely not going to return profits on your decision there. So these are the little things that we looked at, the psychology of what's happening, the compression charts. I have a triangles video. I think you have a whole suite of tools available to you that you can really start exploring now and using to your advantage. Have I missed anything with type 1? I don't think so. Market enemy, we know. By the way, price away here, I don't see any wicks. So we have these pyramids right now that are telling us to go look for a position here, but I don't know. it would actually be somewhere, yeah, right here. There's nothing lower, and it's already played out. So yeah, by the way, also if you have a signal pyramid and this bar progress was included here, guys, so you can time it 96%, 95%. When this shifts over to, notice how the timer is so slow, but closer to 1 minute, maybe percentage is not that great, maybe we should put a timer here, but closer to 1 minute before the candle close. So if the pyramid is here, right, and before the candle close, and you find prices so far, look, why did we pump on this candle yesterday? Do you realize that the EMA was here, and then the price was here, and there was a huge gap, and we have a pyramid with a green dot pre-order and delta overstretch here to the max, and it's telling you, look, if we put a line here, like this orange line, we can see that this line doesn't get touched by delta. It doesn't. Look. Where can we find that this line actually touches delta? Okay, here. It touched it here. Right here. What a slingshot that followed. What else did we miss? So yeah, this is how you work with these signals. You know, learning about what this wave is, which indicator is it, stochastics, is it like what kind of processes is it using? It doesn't really matter, okay? Don't confuse yourself with what EMA size, like, you know, what period is it? It doesn't matter. It's been built to work visually to alert you and guide you along and give you like a visual understanding of what it is that you're looking at. And so this gap here, when the candle was closing to here, it was probably a good trade if you switched away from the 5. So it doesn't cloud it, like what I have done here today. I went to 12 and I saw that there was a buying opportunity here and I bought. And so if you switched away yesterday, 6 hour or 4 hour here, you would have seen as it was in progress. So since you're long biased and you're looking for a long, maybe you're just focused on that. The dragon skin is at the picture, at the door. There's no, obviously you don't need it. Punch out, you don't need it, right? These are huge candles here. Now this could be a punch out trade. How can we actually get in a short and profit from this right now? If this is a punch out. Now, if you're working, and believe me, it doesn't matter what time frame you're on. If it's a punch out, it's a punch out. So from here down to here, back to about here, the stop loss would sit right at the 38, 56, 57. So price would have to come back all the way up. So if you wanted to hedge, your account on 1x, go short right now and scale your ladder, your range from here all the way up to here. Your average would be somewhere around here. Meaning, if price goes up and picks you up on a 1x account size all the way up to here, first of all, Bitcoin increased in value. You now have a little bit more than 1x at this level than what you have at 1x at this level. Does that make sense? You can long 1 million contracts here with 10 Bitcoin, but you can long only 500 at this level because its value has gone down. This goes for your account too. Whatever the account size is, you can afford to trade more contracts when Bitcoin is trending higher. And when it crashes, the size will change. You cannot trade with the same number of contracts anymore because it's an inverse perpetual contract quantity. You're not putting Bitcoins, you're actually putting the dollar value. That's how Bybit gets you. And that's why people get liquidated on the dump very often, because their value goes down, margin requirements go up as it happens. Does that make sense? And so what you're doing here is you can go short as price of Bitcoin increases. And it'll probably fluctuate and you'll probably get a good position here and you'll hedge out. If it goes up to here, you'll see what happens. And if it does go up there and pick you up and then reverses, they'll probably put you in a good profitable position instantly that you can exit and save your Bitcoin and benefit from the fact that you're going to basically lock in the value of your Bitcoin and put a stop loss here on this punch out if this is indeed a punch out. Is it? It's not yet. We have to break above here for this to be a punch out. But if it does punch out here, yeah, so this is what you do if you're thinking about like short it and hold it. But if you do that, if you short it and hold it, you have your funding rates over here where that short position daily you will have to pay 0.0571%, and that's going to eat. Where's that? You're not making anything. It's going to eat away from your wallet little by little by little by little to pay these FOMO longers who are they themselves are underwater, and you're paying them. Sorry, they're paying you. Sorry, I got confused. It's not negative. It's positive. My eyes are all messed up. So it's still positive. So you will actually collect all the fees while everyone is long. You're staying short, and that's one way to go about it. Bitcoin goes up here, close the short because your value in your Bitcoin is back in business, and we're probably going to go to 60K and 70K. If not, then we're going to attempt to go to the stop. We're not even going to make it to the stop loss, and you will accumulate a good position with your average somewhere around here. And if price goes down, well, you're in profit. But it also might not go all the way up. So you might not pick up any contracts, or maybe a few of them, but you want more contracts. But you need to have that dry powder. Don't lose your Bitcoin to the evil price action and exchanges that are out to get it. Let's not freak out, ladies and gentlemen. This is not a competition. And honestly, sometimes when I don't know what I'm looking at, I admit it. I say I have no clue. So what am I going to do? I'll probably have a clue tomorrow. The market will show me something, but right now I am clueless and I'm not willing to speculate because I know Bitcoin is going to make me look like a damn fool. It will make me look like a damn fool. Yes, it will. I feel so. Because this level, and we've been conditioned. We're still I'm still long. I mean, in my mind, from all that, like months upon months, I'm still long. I can't let go. How am I gonna get short now? But maybe this was the needle that popped the markets. Maybe Tesla was it. Who the hell knows? Tomorrow, I'm gonna get my confirmation. Okay, so up until then, I don't know. Well, we covered all there is to cover in this one video that turned out to be like an all-inclusive tutorial bootcamp thingy, and I think there's nothing else to know about the system. Structurally, you're looking at your EMAs and moving averages. Don't call it that, okay? There are equilibrium zones and there are baselines, okay? Because it's gonna mess with you mentally if you refer to them as moving averages. You're gonna complicate things. And you have your strategies: the breakout strategy, the trend following strategy, dragon skin, adding to checkpoints. And just sit back and look at the chart across time frames. Go full screen. Forget about this tiny little Bybit Pro window. Go like full screen. Look at the full glory of what's happening. And when people ask me, what does this mean? Honestly, the thing is so accurate. Look at the chart and tell me what it means. Tell me, what does the green cloud mean when it goes up? Tell me what does it mean when it goes and cracks here, when it goes red? What does it mean? Tell me. I'm dying to know. What do the green dots, everybody knows what the green dots mean. What do the red dots mean? Let's look. Oh, wow, that's not good. I'm sorry, but let's just focus on the actual trading. It's all because the whole industry brainwashed people into thinking that there is some sort of magic, and you need to educate yourself on that magic, and it's how to read it, how to read the charts. You know, there's nothing to read. There are loopholes in the system, in the market, inefficiencies that we can exploit. And some people share them. I share with you some of the things that I have used for years and discovered. But if it goes out, if everybody starts using it, it no longer works. And I'll prove it to you because we have a question here where Muslim Crypto says, can you please check EQ zones and baselines on Forex Gold? If we go to, let's go to Stock Screener. You can click on this Stock Screener thingy over here. And let's go to, I don't know, let's find, what do you guys like to trade besides Bitcoin? Like penny stocks? Give me your, let's find a random, some crazy illiquid where there's like momentum, volume, all the indicators will fail. Let's find some random, flip a coin somebody and tell me some letters, like 3, 4, some names, some random letters, okay? Like PVZ or something, I don't know. GME had a market enemy set up at the pyramid right before the pump, pretty much on all time frames, and especially the daily. And I don't know how those hedge funds, Melvin, like, no, seriously, you want to see GME? If they had MarketSpy, you're like, how are you short here? It was a thick green cloud building up, and they're like, we're short, and it was on the weekly chart. No, don't give me gold and silver because that's way too easy. Give me something that is very annoying and hard and where all the indicators will fail. Like the DXY is, you know, oil. That's funny. No, I'm talking about something that is like PTMA. How about pizza? Is there a pizza? Oh no, it's capital. Can't spell capital without pizza. Shitcoin cryptos, that's possible, but I want to show you, like, who are these guys? Main Street Capital Corporation. Main Street. All right, let's see what we can look at this. Look at this madness. This is the Main Street, okay, ladies and gentlemen. Main Street. I present to you. Now, first of all, now when it comes to easy there, Armageddon. When it comes to what's it called? High, like these candles, right? Where price, I don't know, there's like volume, no volume. How are you gonna confirm volume here? Same way I told you about the explosion here above the moving average, the water line, where when it's underwater, it's like whoop, 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 whoop. The whale goes for a little breather, for a little air. Is there to exhaust some water out of its hole at the top of his head or whatever, right? So this is what is this? That's funny. Hole on top of his head. I don't know what you call that thing. But here we have Haikanashi, and look, magic. And then you go to YouTube and you see some algorithm that's running live there streaming it, or crypto face streaming, and you're like, wow, it's so accurate. Now let's see if this is accurate. Now we turn on our Armageddon and we go and we start marketing it. And we say, you know, you could have went long here. For sure, you could have gone long here. But I will just turn off the augmentation for example, because there are slight little differences, not that big of a difference, but you can already see, you're scanning it, you're like, got it. I see. Right? With the pyramids, did you see that? No windows. So there's a window here, there. It's already like right there. So the baseline. What is the baseline? Dun, 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 dun. GPS. Okay. Momentum, short-term flow. Short-term crossed above the 0 line and baseline reclaim. Went up. Dip. Color change. 2 baselines reclaimed. Poop pump, 3 baselines reclaim. Momentum looking strong, 0 cross line. Whoa. Retest of the baseline here and here. Dragon skin. Thick green. Do we go long here? Boop, max 7 right here. We bring Armageddon's reconnaissance and scan. It turns out that on this max 7 continuation signal, our entry here was absolute gold. And what do we have here? A continuation pattern. What about here? Didn't expect that, but baseline reclaim drop. Do we reverse? How about we bring up the normal candles now? The ones where everything will look like pure hell. All right, so look at that. We have this supposedly window, and illiquid. We can see that the liquidity here is so-so. There's even worse. It looks like a broken screen with like little dead pixels. That's how the chart looks like. It looks like dead pixels all over the place, like this. You don't even see the candle bars. There's nothing. So here, these are the kind of things that will catch you off guard, will rip through all the baselines here, will not respect CPR. And you just have to wait and understand what's going on with this company fundamentally. Positive news, find positive setups, trade them. Look at this. And this is a 45-minute. Who does that? Let's go to daily. Stonks are not made to be traded on lower time frames. Look. Wow. Who could have predicted this? We dropped that. I'll tell you who. You, me, us. Why? Well, we just closed on this crowd when we dropped. This is our value line. Devaluation from here. Retest. Damn. Long-term trend flow. You're going down, son. Reclaim. Baseline retest. Long signal. Now, it's not an actual physical retest, but we can sort of gather from this that, yeah, that's the chain of events here is that reclaim, dip. Let's not call it a retest because it makes it sound like has to touch it, has to be a bullish candle, has to. No, the market doesn't have to anything, but it shows us artistically that you have, okay, here momentum is picking up, white, okay, maybe I'll go long. Went long, hold the line. Wall Street Bets is looking at you like, how are you doing this? You don't tell them you trade with MarketSpy, you keep it hush. And what goes on here? Nothing, just tumbles a little bit. Probably there's nothing. It's literally telling us nothing. For scalpers here, it's a daily chart. What do you want? Right? And we rise above it. And now we're facing this way. Guess what? We clear this resistance. It's a pump and dump. We will pump bullish on Main Street Capital Corporation. And it just continues. So let's bring out DSR and see what DSR is telling us. Now, this is actually, we have to go to lower time frames. On DSR, we have to change settings for weekly, not daily. But if we were daily here, right, what would we have done here? Well, it's the same thing. You have your orb. I can't even see the price on the 15-minute chart. Like it's so hike in the sheet. That's when you need hike in the sheet. You see what I'm saying? This is what this is all about. So price dumps here. I told you, crossover way later, not together with the price. Bullish signal because it's a lag indicator. Go long. Boom, continuation. Why is this crossover working? Bullishness, and this one when it crossed over failed because price dumped here, fell, and this crossover happening now. There's a huge lag there. Here there's convergence. Price is literally just small tiny candles crossing together. Boom. It's beautiful. This thing over here now, right? We have this orb is going to come over here and this is going to crash. And look how thin these guys are. You know it's going to fly right through, right? Over here. And momentum is probably going to weaken. So keep an eye on this Main Street Capital tomorrow and tell me what happens. In well, this is a 15-minute chart, so I'll tell you what happens in 15 minutes. We're going down. We're going down. So this is your general look at some other markets. And look, you trade one chart, one market, you get good at it. You trade them all using the same system. Now you have no choice but to go and diversify and start trading multiple instruments, and you need to learn about them. You need to keep up with the news. You need to apply different strategies. And now you finally find out that your favorite indicator doesn't work the same across all of them. And so that's why I recommend you choose one instrument. Look at that logo, Cryptopocalypse now. What's so special about Bitcoin? Now, a lot of you guys, hey, I love Bitcoin. Bitcoin is great, but I'll tell you what I love about it the most. It moves. All right, as a trader, I'll tell you why I'm in love with it, because it moves. And it has a lot of inefficiencies in its price that are exploitable, that are easy to manage, and it's fundamentally driven to only go up. That makes sense. So we trade Bitcoin as the ideal. It is revolutionary, no doubt about it. But in terms of trading, it's also a beast of its own. It's more than just a coin. This thing can move.